The S&P 500, the Nasdaq 100, we got to talk about exactly what's happening on the market. Now, if we look specifically at the market from a view of tech, it was a good day, right? So if we look overall at tech, we look at Nasdaq, we see a lot of love that kicked in, finding a short-term bottom potentially coming into previous highs that were at June 5th. Interesting level. Now, if we look at some of the action, some of these key levels as well, 14.85, back into those previous lows as well. You push through, you powered through, right? Intraday, a little bit of a rejection, push back down, right? So overall, interesting. Some would take this as a bullish day. Now, I will say we're coming into a massive key level, which was mentioned as well. If you follow on Twitter, I always recommend doing so. We mentioned this roughly this morning at 8:30 at market open. We were rejecting from 14.85 push down. And then I said, if we reclaim these levels, we most likely will run into 15,000 right here on NQ. We end the day roughly at 15,000, come back down, kind of ending the day there. Showing you where these levels come in, you can see kind of still stair-stepping down, but getting a little bit of love here. Now, what I will say is a majority of this love came from NVIDIA, semiconductors as a whole, NVIDIA, AVGO, etc. You reclaimed, gapped above, 440 and never really looked back. 470 is where we're at now. Looking at a visual here on the daily, again, might not like to hear it, but the signs here, the potential trap of sellers at 400 is disgusting. So you'll look really bullish going into earnings on Wednesday. I'm going to tell you right now, I believe there's like a 10% move priced in right now. You can check Options AI, really good visual there. Yeah, not ideal. So about a $46 move as of right now priced in. Now, before we get into any more content, I ask you to do two things. Consider liking and subscribing. So consider joining Discord if you're ready to take that next step. I always recommend people, take or at least consider what we're offering there. But if you're looking just for signals, this may and probably is not the place for you. This is helping you get to that point of being a lone ranger, understanding how we trade, why we trade, key levels, supply and demand, everything in between. We have webinars throughout the month as well, so consider doing that. Let's get back to it. So as we look at this, you look good here. I mean, it's totally possible until tomorrow you break all-time highs here on NVIDIA once again. Buyers are stacked in as a whole. You get a visual here of NVIDIA, get a view of semiconductor. Just calls galore flying in as we look at premium, okay? Understand that. A lot of big buyers. The biggest buyers that I've seen are 550s for September 15th of next month. And those are the 550 calls. Lots of buyers flooding into there, and you're seeing still flowing in weeklies as well. So again, just want to say, if we're looking at upside potential on the day, primarily stems from right here, okay? I want that to be addressed. Also getting a visual, you can look at the heat map and what's happening. Yeah, Microsoft up around 2%. We'll talk about that in a second. Meta as well. But again, large players, large names coming in. AVGO, NVIDIA, semiconductors as a whole. That's where a lot of that love came in. Tesla had a good day too. I will say that. Tesla, really strong day. So again, that's where a lot of your love comes in. We look at a broad market, you can look at Apple. You can look at some of these others. Not as great of a day, right? Solid day, 0.63% on the day. Not incredible. Meta, it's one of the top moving names, but again, you're just back at that 289 key level. Microsoft, probably one of your best names. People are trying to draw like falling wedges on this, and you're just manipulating charts to what you want it to look like. Overall, you've been forming in a downward channel. You are trying to break out of that. You get something like a 4 hour, you could argue you have a little bit of a falling wedge. I hate falling wedges, but again, you're back at 322 where we originally went short, all the way down to 316. But again, you still look decent here. I say all that to say this, right? There's areas of the market that look good. I agree. But as we look at how we're performing, and again, I know some people are like, Tyler, do you see the head and shoulders? You had a head and shoulders here, inverse head and shoulders right there. You can see how that formed out. You hit up, came back down. So it's hard to validate that still because it's not a neckline. But again, you're moving good, but I just urge a lot of caution here, okay? We have a lot of big things coming up this week, and that's where I want to stem this video next, right? And so really quickly, just look where we're at. And you got to get more information, but right now you're just rejecting from you're just sitting at previous lows here, 44.12. That's where we're at. Now, rest of the week, what's happening? Obviously, first focus is NVIDIA, but when we look at the calendar, there's still a lot happening here. Tomorrow morning, Fed members start to speak quickly. We have Barkin, 7:30, that's 6:30 a.m. Central, very early in the morning. Goolsbee Again, these aren't huge Fed members, but it's starting to like kind of tick off. Okay, it's starting to tick off. Existing home sales. I think we have to pay attention. Okay, got to be paying attention as well. New home sales coming out Wednesday, I believe. Yeah, when this is Wednesday, and then again, we have Jackson Hole starts Thursday into Friday. It's going to be never ending from Thursday to Friday. Keep your head on a swivel. Okay, now when we look at what's happening with home sales, okay, I want this to be understood. New home sales are the most important. Let's talk about these. Now, new home sales, we all remember where this kind of had the uptick, where we had the really good data going into, I believe, March, and then we had the uptick and just home sales were doing really well. I think we may start to see a decline in home sales. Okay, so hear me out. This is new home sales, and let's go to existing home sales really quick. This is even, more eye-catching, right? So February kind of was that stalling. We had that uptick right here, 4.55, then kind of stalling down. Okay, now again, I want to say this. The best time of the year for home sales, which is why I was bullish going into summer, is summer. That's the best time of the year. Doesn't get better than that, okay? So if we start to see the decline going into fall, which typically has a slowdown, right? And then as well as continued raise rates. And then what's happening with yields, which we haven't really got into yet, right? Yields are going up. The 2-year pumping, 5-year pumping, right? 10-year pumping, 30-year, right? This is the inversion, right? The 30-year though, pumping, right? The 30 and the 10 are at highs, okay? You are at 52-week highs, even higher than last year at our bottom in September and October, okay? To when you reach your peak and then stocks ultimately bottomed. We need to understand that. Now, when we also look, XLF, the banking ETF, one of the only sectors today that was red. Now, granted, you had a decent ending to the day, but I think XLF continues to track to the downside. So what do we know right now? Okay, for this week, let me just map it out for you. Wednesday is where things really heat up. We have NVIDIA's earnings, very big. But until then, tomorrow, we're going to start to have some sketchy news. We're going to see more Fed members finally start to come out and speak. And I'm not talking out of the closet, although some of them, I'm watching you, okay? So when we look at these, first Fed members really coming out and speaking since PPI came out bad. Remember that. The only Fed member that I've heard speak since then was Kashkari, okay? And he did not even discuss it, just talked about the housing market. Now, there's this viewpoint from the Fed so far that has been that the housing market has bottomed, okay? So I believe this home data going into Jackson Hole is very important, especially with what's happening with rates, because you cannot say the home market has bottomed, real estate market has bottomed, if we continue to raise rates and yields continue to go higher and higher. Because if yields go higher and higher, rates go higher, well then most likely their average rate, average home loan rate will continue to rise as well. That's why we're seeing a overall slowdown in the housing market. Okay. Now going into summer, again, this is just the busiest, best time to buy a house. You can check the yearly reports. It happens every single year. This is the best time for the market as a whole. So again, leads me a little curious going into this August report. Now, going into Thursday, Jackson Hole starts as a whole. We have NVIDIA earnings. Now, I will say, NVIDIA's earnings have set the tone for the market. Okay. Giving you a visual. Basically, until this last, earnings report from NVIDIA, the bar for revenue was set at 8 million because you couldn't get past it. Even during the most bullish market we had in 2021, NVIDIA could not surpass those numbers. But then the reason why NVIDIA went crazy is they said, you know what, screw it. The demand is so high, we're going to go from 7 million to 11 million. And that's expectations for Wednesday. Okay. So NVIDIA has to at least match expectations in order, in my opinion, to continue on this run. Okay? Hear me out. Now, what I will say, I'm looking at NVIDIA's chart right now, and I'm just like, it's been like the discussion for me and Jay all day long. If NVIDIA runs to 500, which it's looking like it wants to, if the market doesn't absolutely tank or we get really bad news before Wednesday, it looks like NVIDIA wants to hit 500. If NVIDIA hits that before earnings, is it just getting a run beforehand? What constitutes NVIDIA pushing to 550, 600, right? Even though targets are there. What constitutes that type of move? And in my opinion, they have to continue to raise guidance, right? So not only we've gone from a market of NVIDIA, reaching 7, 8 million, which again, I think NVIDIA should be going up. I really do think it. Now, right now, it's kind of sketchy with earnings. I think it's just like a lot of expectation and FOMO. But overall, as a market, I think NVIDIA should be one of the best performing stocks because they are the central focus of this emerging market of AI. And AI is going to be here. It's not a bubble. It's going to be here for the next few years. Okay. So we know that. That's out of the way. Now, what I'll say, though, is NVIDIA has a lot of expectations. So NVIDIA has to, at the very least, perform 11.2 billion in revenue on the quarter. And then they got to have great guidance, okay, to continue up. And if that happens, I think you get a little bit of love on the market on on Thursday. But all that is to say this is Jackson Hole starts the day after NVIDIA earnings, okay? And I know everyone's like, well, Tyler, we're on Monday. Why are we not talking about Tuesday and Wednesday? Because in my opinion, this week is a shit show to trade. You're going to be doing yourself a disservice by trying to trade this because it's all based on news. This is all news. This is all catalysts, and you cannot predict those. We understand that, right? We do not have a crystal ball. We shake up, and it just spits out the answers. I wish I was that awesome, but I'm not. I'm just a bar or a decimal point underneath that, which is still really awesome, right? We still look great. Even when we're chubby, we still look great. Am I right? So, again, that's the visual and the look you have to take here. Now, as a market as a whole, what are they pricing in? As we look at yields, you're going to see the market is preparing for the worst. The 2, 5, 10, 30 are all moving up rapidly. The dollar is consolidating at a massive resistance, even though other countries are manipulating the currency, selling off massive amounts of the dollar versus the Chinese yuan and other currencies as well. But the dollar is staying resilient. Again, not a good notion for stocks, okay? That just shows you right now the market is uncertain. They are hedging both sides. Again, who would have thought hedge funds playing both sides? So take that as a grain of salt, whatever you want to take it as right now, okay? So this week, I can only say this is like, I don't know how to say this, but people are still going to trade. This is the most dangerous week you could trade. I'm going to show you what happened last Jackson Hole, but let me tell you right now, it is the worst week to trade. Let's get to the chart. What I want to do is I want to show you the chart of what happened last Jackson Hole. Okay, you're not going to believe me, but this is what happened. Go look it up. Okay. We go and look. Jackson Hole, I'm pretty positive. I'm like 99.999%. It was on this retest that you had back on Nasdaq as well. This is the weekly chart. We already had the drop and we started coming back down. Okay. Jackson Hole. All right. Gross, disgusting behavior. Brutal. Marked the top, marked everything. Okay. Just want to highlight. Very similar structure. Okay. Topped out. I'm not saying it's going to happen the same, but I'm just saying very similar structure. Have a little top out, pull back, and a Jackson Hole week, little upside, surprise, surprise, upside, and destroyed. So again, I don't want to say you're going to get destroyed. I don't want to say anything that's going to happen, but I'm telling you, caution. This dictates the overall plan from the Fed. And another big thing that is like expected from the Fed here is the idea of raising the new normal of rates. We've already done things over the past year that are totally out of pocket. We've raised rates at the fastest rate ever, okay, ever in history. Jackson Hole is where they give you the game plan. Last year, they gave us the game plan. They stuck to it. It was true. And we're there again. So now the question is what is going to happen there? Is the idea of holding rates for 12 months a possibility? And I think it is. How does the market respond to that? How does the housing market respond to that? How do banks respond to that? We've already seen a bank collapse, multiple. Does this spark it again? Jackson Hole is definitely something we have to keep our eyes open for. And I've been saying this for like the past year, even during this uptrend. I was saying, look, eventually data probably comes out bad. Just going to happen based on how we're recovering. But it's how we respond to that. That's why I say this right now. I'm not in any huge short positions. I'm not in any long positions besides my 2025 Tesla position. Besides that, I'm in nothing. Just sitting here patiently staring at my 3 monitors, waiting for time to go by for Wednesday and then ultimately Friday. Okay? So that's what you have to understand here is be careful and understand what's going to happen. It's going to be a nasty, gnarly move. Now, again, when we look at what's happening here on some of the bigger things here, right? For instance, the dollar. Okay? We zoom out to the daily. This is the daily. You were in a descending triangle, prepared to touch the 200 MA. You had a trap. You instantly bought back up on the dollar. Instantly. I mean, it was monster power pushing back up. Now, if we look here, again, this is the weekly 200 SMA. Now we go to the daily 200 SMA. I'm just saying, again, you need to be paying attention to the dollar and what's happening here with yields. You are consolidating and bull flagging above the 200 daily SMA. Now, again, I like to look at past cases and what happened at this level. The last time we got above, it went just completely insane, the dollar. Okay, we had one wick and you dropped back down, so that is a possibility. But again, as we look at structures that happen here, usually things get pretty interesting above the 200 SMA for the dollar. Okay, just want to highlight this. I want to say it. It's there. Had to say it. It is what it is. Now, again, on top of that, you don't always get this. And this is what's really scary because we look at the yields. And again, these things are primed. This is the daily chart here. These things are primed. Okay. And to give you a visual of how these charts look, we go to the weekly. And again, and we haven't looked at this in a while. Dear God, this is disgusting. This is the yield chart. Again, disgusting. You have broken every trend. Remember way back here when we were talking about this? It has been a while, but you are far from broken out here. Okay, clearly broken out. The 2-year, the 5-year, clearly broken out. Disgusting, and it wants to keep going. You have room to 5.2 here. Makes logical sense. Almost 0.6% of upside. The 10-year also pushing up 5.2. Makes a lot of sense to get into that range. The 30-year as well pushing up. Wants to go. Really wants to start moving. So you're seeing this pattern play out. And again, when we've had these breakouts before, it's been disgusting, the results that we've got. So again, something to watch. And this primarily will come back and affect the housing market and banks in particular. And while we're seeing banks hurt, this is telling me that banks are preparing for what might start to happen here. We've already saw it happen. You just pushed and you held below the 200 SMA. This is a weekly chart, but you're holding below that 200 SMA on the daily as well now. Last time we broke, again, things did not get good. Last time we broke, it went straight down on XLF. Broke here, pretty nasty drop as well. So again, we need to be watching what's happening here on XLF. It's been bad. This was the banking crisis. We got stuck below it for a while. Now we're back below it again. Okay, don't even want to go to regionals, but I can already tell you they don't look good. Yeah, they're already disgusting, and it's a bear flag. So again, not good. A good note from today, oil looks interesting. Bear flag, you're below the level. Looks interesting, right? So again, that's what I'm watching as a whole. That's what I'm prepared for. Again, I look at indexes. I have no desire to trade these. Great bounce so far, potential dead cat, whatever you want to call it. I don't care. I am not trading upside potential on the market. Maybe I can scalp with NVIDIA's earnings. But for the most part, you do not want to be stuck in trades overnight this week. That's my number one thing I want to say. No one else is going to say it. They're going to point you some pretty graphs, show you what's going to happen. I'm going to tell you right now, nobody has any clue what Powell's going to say on Friday. But if we look at data, it suggests things may not go in the bulls' favor on Friday. But if things go well, I promise you, what do I always say? You will have an opportunity to get in. You will have countless opportunities to go long. Again, just like we said back here, when we took forever to flip long until the end of January, we had every opportunity to get in over and over and over. You had so many opportunities. Just like on the downside, when we went short at like 15,000 here, we caught the downside. We had an opportunity. We're going to get another opportunity again. I guarantee you, right? So stop trying to force all these trades. Stop trying to be in 10,000 trades every single day. Be patient. And I'm telling you, this is a huge, I was telling Jay today, I guarantee you a lot of traders are going to lose a lot of money this week. If you keep trading, you will lose a lot of money. I promise you. I promise you, this is a great week to lose money. I'm just trying to be your friend, trying to be helpful, trying to get some tips. Have a good one, traders.